Up and running. Come on. Let's good to go. Good to go. Ladies and gentlemen, welcome to the Before the Bell edition of Wealth Dawn with me, Noah PM, where we build and protect wealth. We had such a good day yesterday in the markets. But if we were following along, I would have told you this could be a fake out. This could be a fake out, and well, it kind of was, and it wasn't. Google was up massively yesterday, and also Broadcom, AVGO, up like crazy. Why? Well, due to the fact that they are building actually the processors for Google because they're not trained on NVIDIA processors. The AI, Gemini, is trained on Broadcom's processors. So there we go. Synergy, once again in the markets. How long will this last? Because now Google is the favorite, and then somewhere else is the favorite, and then somewhere else like NVIDIA is the favorite, and so far and so on. Very good day yesterday in the markets. For those of you who took some profits, who were in kind of a pickle, you did great. Because today is not looking good. Not looking good at all. Let's go over the indices, the major indices. Let's go up and let's talk about, as usual, we're going to go over, do a little market recap, go over the day's daily movers, pre-market movers, key events, and we're going to go over some trade setups, that potential trade setups for the day, or for an entire week even. So let's start with the S&P 500, which closed up 1.55% in the positive yesterday, but today the futures are pointing down. Take a look at this. This little fellow, this little candle is squeezed here between the 20 and the 50-day moving average. So what are you going to do? Are you going to go up or are you going to go down? Because the market is kind of bifurcated. It wants to go up, it wants to go down. It doesn't know what it wants to do. But the NASDAQ did finish up beautifully green yesterday. Today, holding that 50-day moving average. So this is so story driven. If something comes out today and freaks out the markets, then it's game over once more. We're going to retest that 50-day, the 100-day moving average if we hold that on the S&P and have a bounce back. Now, this is actually a pretty good test. This is a perfect test for if the market is going to go up or down. What I would like to see today, that we go over the 20-day moving average and we close on Friday above the 20-day moving average, and then we're good to go. We're good to go for the next leg up. If not, then we're probably going to come down here and retest this once more and then maybe go up, or we could still go down. This right here is really critical level. This, like this 50 and 20-day moving average right now. So currently where we're at. Now let's take a look at the Dow Jones, which is currently in the pre-market underneath the 50-day moving average. The only one that is above is 20 and 50-day moving average, and it's turning upside is the Russell 2000 with the small caps, because they're just expecting that those rate cuts. Now, the DAX, we're also going to talk just a little bit about the German index here. The DAX opened up green, but just take a look at this. Even if I go on the, I didn't touch it, but if I go on the 1 year, it touched the 200-day moving average. So I think that if this goes up, then the correction in the German markets is done. Why is this important? Well, there are a couple of stocks that are really interesting there in the German markets, and that is Rheinmetall, the weapons manufacturer, which had a, let me go to that later on. It had a terrible day yesterday, down like 15% or something like that. Okay, let's move on to the VIX. Now, what the VIX is currently telling us, that's all over, everything is okay, calming down here, and we're going to have a nice December going into January. That's what currently the VIX is telling us. Will this hold? Well, I certainly hope so, because this right here is enough excitement for me for 1 week. I'm good to go for the next leg up. Come on, baby, let's make some money. And I don't want to make money by betting against stocks, because I'm constantly losing money when I'm betting against stocks. Look at Eli Lilly. I'm bleeding there with Eli Lilly. does not want to come down. I don't know what is up with their stock. Let's go to the dollar. The US dollar, the beautiful US dollar, still above 100. And this holds here, which is dangerous. I want this to come down just a little bit. I know the dollar rally is kind of preparing for the next leg up. But come on, come down a little bit. Let's just take a breather here, retest this 50 and 100-day moving average down here. Forget about the 20-day, go underneath the 20-day, retest this, and then you can have another leg up. Why? Well, because if the dollar is strengthening, then there are problems in the market. Now let's go to the oil. Oil is still in its downtrend. Let's take a look at it. Since its major top here in the pandemic, where we had oil at, after the pandemic actually, but we had oil at $123 a barrel, going from negative 25 cents a barrel, which never ever happened. So those of you who are playing strangles in oil, sorry, it's 1 in 100 years event, but that's just like it. But right now, oil is also flirting around with all-time lows, just due to the fact there's not a recession. So if a recession would come, then we can see oil down here like we saw it in 2016, 2009, down in the 30-ish zone. But it could happen. Just take a look at this. Boom. But oil somewhere in the 50 range is where I think is going to just stay there and then have its next leg up next year or the year after that, where gas may come into play much more than uranium. Because let's be honest, building those nuclear reactors is all fun and games, but natural gas is the way to go. It's more efficient. It's just there. Let's go with those turbines. GE Vernova is sold out. They're building the turbines, sold out to 2028 or 2029. Meaning, if today go to GE Vernova and say, I want a turbine, they're going to say, no, 2029 is where we can start building your turbine. And then it's going to take a couple of years or a couple of months. Okay, let's move on to gold. Gold coming back here. I'm on the 5. No, there we go. Okay, gold yesterday had a great day. Today kind of opened up a bit lower. I love playing gold here in the range of, as I said, do a strangle on gold. Not financial advice, not investing advice, but I would just do a strangle on gold between the 5,500s, 4,500s, and its lower 3,700s or 3,800s. Why? Well, because the bull run is not over. If you want to skew it just a bit, even the 3,900 is looking really good there at the 50-day moving average. I don't think gold is going to breach this as long as there is no recession. The only thing stopping gold will be a recession, which I don't see on the horizon, but nobody can see a recession. We're always dating a recession backwards, not forwards. Let's take a look at silver. Same play here. Beautiful possibilities for a strangle, even a 112, where you're basically betting the downside that it will never happen, and that downside would be somewhere around the 40-ish. Sell 2 puts there and just wait as gold goes upwards. Copper, same story here. Copper wants to go higher, just can't. Let's move on to euro and dollar. Euro coming down, dollar going up. British pound going down, dollar going up, and the Japanese yen also. Wait, this is the dollar going up and the yen coming down, of course. So we're kind of up here at almost previous highs for the Japanese, not the dollar against the Japanese yen. So the yen trade is still going, and now let's move on to Bitcoin. Also, I need to add back Ethereum. Why do I not have Ethereum here? ETH. Ethereum to dollar. There we go. We have Ethereum again. Okay, so Bitcoin. If Bitcoin holds here, then we're going to see a beautiful leg up in Bitcoin. But I think it's going to go up, come down, go up, come down, and then in the next year, somewhere January, February is where we're going to see Bitcoin shine again. So if you think that you hit the bottom of Bitcoin, just wait a bit. Let us do its retest. Okay, there's nothing to lose here. Still a lot of space here for Bitcoin down to the 80, 75. range. Perfect place to buy some Bitcoin for the long term. Ethereum, on the other hand, well, it still has potential to go lower. Let's take a look at its last lows, which were in April at 1,400-ish dollars per ETH. So Ethereum currently holding down here. Nice little support zone here. In this range, this is the best buying opportunity for Ethereum. Well, you can nibble on it, buy some Ethereum, hold it for a long time. If it comes further down, I would still buy some Ethereum here. Okay, so that's it for the major indices. Now let's move on to some major movers in the markets because the markets are moving. So yesterday we had NVIDIA up 2.05%. Today, who would have thought NVIDIA is down massively? It's down at $175 a share in the pre-market to its previous $182 a share yesterday. Take a look at Apple, which is also down from its previous high. Now, I think Apple is kind of hitting the ceiling here, and it's bracing for a nice little correction because Apple just went up like a, whoa, like a rocket up here. Is due for a correction. Now, hold on to your panties because Google just hit new all-time highs, and Google is currently sitting, let's look here, at 332 in the pre-market. Closing yesterday at 318, moving up today. What is that? 16 points. What a run on Google. Is the Google story over? I think it's just getting started. So for all of you who bought Google down here, hold on to it. Don't sell it. Google is running. Google is running. Now, Microsoft, on the other hand, is not running. It's coming down. It's even down even more in the pre-market. And that is just a nice little correction for Microsoft. But don't worry, Microsoft is coming down in this beautiful, beautiful range. What should I just do? Let me just cancel this right here. Microsoft is coming down in this range where I would say it's time to play some Microsoft. Hitting now its previous high, all-time high. Maybe it's going to stop here and just prepare for the next leg up. I would still wait for confirmation, but Microsoft is coming into some pretty nice ranges for us to play Microsoft once again. Now, I wouldn't start here with naked puts. You do need a large enough account for this. But preparing to buy some shares on Microsoft, not bad of an idea. Now let's go to Amazon. I love Amazon. Amazon, I think it just find its footing. Amazon is the only one that hit the 100-day moving, the 200-day moving average, and boom, bounced back from it. Amazon currently up in the pre-markets. Move to AVGO. I don't know what to say. Is this company going for its next leg up? Because it closed yesterday in 377 days in the pre-markets, up at 388. I think this fellow wants to go up, up, up. But moving on to Meta, which also I think is found its footing. And if you have a big enough account, I will start selling naked puts right here on Meta. Just underneath the expected move, we're going to go to Tasty Trade just in a couple of seconds and see what kind of prices we have there. Meta is setting up for a beautiful trade. Now let's go to Tesla. Tesla hit its head on the, where is it? On the 50-day moving average. Looking at the 25 moving average in the pre-market, resting on the 50-day moving average. I think this is preparing itself for the next leg up, Tesla that is. So selling some puts down here at its, let's see, at 390, I would sell some puts if you have a big enough account, even with the risk of being assigned. Maybe not such a bad idea. If you want to be more cautious, sell them under the 360 mark. Maybe we're going to find some good prices. If not on the weeklies, on the monthlies, if not, then go out even more. You could find some good buying opportunities there. Berkshire Hathaway had a really good day yesterday, but as I said, Berkshire Hathaway was up here. That's where I sold it. Came back down here. I don't know how it's going to, I was pretty sure it's going to come down, but I don't know how much of a leg up it's still in there because the AI trade is not dead, in my humble opinion, and it's just going to kick up once more in the next couple of days. Okay, let's move on to Eli Lilly, which is up in the pre-market. I don't understand it. What is up with this stock? What's the story here? Check this out. It had from the 30th till now 2 slightly negative days. So in over 2 weeks, 3 weeks, it has had only 2 negative days. Now, either this stock is going to so massively correct that your pen is going to fall off, or I don't know what to say because I'm hemorrhaging money on this trade. Okay, last but not least, we're going to take a look at Walmart because it had such a beautiful run here in its earnings, and then it kind of gave everything back. So I think it's time to buy some Walmart when it comes down to the 101 price here, and that's not such a bad idea. Also, let's take a look at Oracle. I skipped over Visa and JP Morgan. I'm not interested in them right now. Now, Oracle is coming once again down here in its previous all-time highs. And this could be a buying opportunity for Oracle. I know. Their bonds are kind of trash and so on and so on. But companies will make money. I think it still will make money. It's a big player in the AI trade. Okay, I'm going to stop right here. So let's just go over to Taste. Let's see if we find a couple of good trades here and good trade setup. So we talked about Oracle. Open up Oracle for the week. Yeah, let's go for the week. So we have just at the expected move, the 190 strike, giving us 139 if you find the middle there, costing you $3,000. That's a little bit dangerous there. I wouldn't take this trade. Now let's see if GDX gives us better trades for the, let's go to the week. Still have 3 days. No, I also wouldn't risk this. Another 0.5%. Yeah, maybe 0.5%, but $42 and risking 1,032. So 76% chance of having profit, 63% of having half of that profit. Still too risky. I think the best setup here is still selling some puts. Look at the AMD doing here. Take a look at this chart. We didn't look at it. Ooh, nice. Naked puts on AMD. Good to go. You have the money. Let's go, baby. There's some 170s. Let's see how those are looking. 170s. The 24 days. 170. Too far away. Go to the monthlies. 170. Ooh, getting $123 in 1 month, risking much better trade. Much better trade. You can also go to the 1 standard deviation. Assume maybe just after it, assume a little bit more risk. 18 delta, not so bad. Risking 1,800 to get, or paying 1,800. You're actually risking to be assigned. So that wouldn't be even that bad. Getting AMD at 180 for the long term. But if not, you're going to get $216 in 24 days. And maybe going to get half of that even sooner if the market holds up. Let's see, what is AMD doing in the pre-market? Right here. Let's go to AMD. Ooh, down. That is just perfect. Because this means that the prices are better. So we have here 194. This is sitting here. Could come down. Pretty risky. Could come down even more. If you want to risk this, what do we have here? 180. 180 down here. I don't know. Up to you. If you want to risk it, own AMD at 180 is still not oversold. So if this wants to get oversold, I will still target the 170. Damn it. Target the 170. Much better risk. So if you don't want to be assigned, because if you are assigned and the stock goes lower, could sell then calls against it. Don't forget about that. But right here, if you go down to 170, still collecting $126, risking 1,000 or paying $1,700, risking the $16,874 for that. Not that bad. Also, let's take a look at SoFi. What is a little SoFi doing right here? We have some good trades on SoFi for the month. Well, you would get 93 risk for paying $93, paying 220. So for smaller accounts, you could go up here and let's just do a multiplier. Let's do 3 of this. That's a perfectly fine trade. Get $170, pay for it $661. Not bad. And risking to have SoFi, which is a great company for the long run. 21 was the 200-day moving average, and 20. Okay, 22 would be a little bit risky. Let's go down to the 21, 81. Well, that's of course that's not that good of a trade, but if you want to risk it, feel free. So, also one last thing would be Oscar Health. See how Oscar Health is handling itself here. I already have this copy sold, going upwards. If you want to risk it, go here on the monthlies, collect 25 cents. Ooh, the risk is too high here. SoFi was a much better trade, I would say. I would not risk Oscar Health down here at the 13th strike. You should go higher, and it did have a, check out this cat. Boom, boom. He had a wonderful day, Oscar Health. Now, if it comes down once again, then you would have a pretty good possibility to set up a nice trade for Oscar Health. Okay. So, what do you think? Let me hear your thoughts. Hit me up with some trades if you have some thoughts on some other trades. I'm Norbert Menhardt, Build and Protect Wealth. This is the Before the Bell edition of Wealth Dawn. Catch you next time. Next time will be tomorrow. Same time, same channel.